Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, the bulls versus the bears. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Every so often, it is useful to construct both the bullish and the bearish views. And it's useful to understand each side of the argument. It's really easy to get sucked in to only one view with no way to see the other one. But at times, it's useful to say, look, let's go through why do people believe the market is bullish and why do people believe the market is bearish? And once you can understand both views, then we can start to have a more reasonable discussion on what that means. And maybe we can even construct a potential outline for how the price action might ultimately unfold. At the end of the day, there's a few things we must remember. And one of those things is that there is not a single person in the world that knows exactly what's going to happen in the markets. It doesn't matter how confident someone appears or how boldly they say something. At the end of the day, no one knows. We're all guessing. Some people are better at guessing than others. Some people get luckier than other people. But at the end of the day, no one knows. And so when you kind of come to that realization, it makes it worthwhile to look at the price of Bitcoin through both the bullish and the bearish lens. And remember that it's a market, right? Just because you believe something doesn't mean that everyone else believes that. And that's what leads to sometimes price action doing things that don't make a lot of sense to you. All right? Now, before we begin, I do want to generally say, and I've said this, for probably 6 years now, ever since I started my YouTube channel. I started my YouTube channel back in the summer of 2019, right? So it's kind of like around this area right there. That was where I started the YouTube channel. But in general, the thing to live by over the multiple decades, right? And if you're a millennial like me, this is something that should, I think is just good practice over the long haul, is that the bears sound smart, the bulls make money. But there are times when the bears are right. There are times. And you can see those times on the chart, right? There are times when the bears are right. And you can see that in 2014, 2018, and 2022. But despite that, the bulls, over the long haul, make the money, right, as the price goes up. So it's really easy to sort of fall into narratives. And, if several years go by and you don't have a bear market at all, it's easy to say that it's never going to happen. And whenever price starts dropping, it's easy for people to sort of say all these crazy things about Bitcoin and imply all the really bad things, but they still refuse to kind of acknowledge the great run that it's had over the last 16 years, right? And anytime it drops 20 to 30%, it's kind of like an excuse for everyone who has talked bad about it over the last 16 years to say that they were right? But you can't, you can't spend 16 years fading an asset and then say you're right if it drops 20 to 30%, right? Like, doesn't really make a whole lot of sense. Obviously, if Bitcoin's going to go up a lot in a bull market, we know in a bear market it can drop. So I want to go through the different views here and try to unpack it, because in a lot of ways, this cycle has been very different if you look at it certain ways, but then in other ways, it's the exact same thing. So I want to try to make sense of what's really going on. All right. Now, the first thing to note is that every prior top for Bitcoin has happened in the fourth quarter of the post-halving year. This is something we have known for a long time. we've talked about it for years as the most likely outcome, as always, is that Bitcoin tops in the fourth quarter of the post-halving year. It happened in the fourth quarter of 2013, right? So we can go over here and say this was Q4 of 2013. It happened in Q4 of 2017. It, of course, happened in Q4 of 2021. And the argument is that if it's not broke, don't fix it, right? Let's not pretend like it has to be different just because we want it to be. But this is the bearish case, right? This is the bearish case. And it's just to say, you know what? We have to be willing to accept there is an outcome where the top is in the fourth quarter of the post-halving year. And it could already be in, right, in October. In fact, we said a few months ago, and what I said then, and I'll stand by it today, I said the two most likely months for Bitcoin to top are either October or December. October or December. November was never a likely option, to me, anyways. October or December. October, at this point, is providing a somewhat compelling case. I would say at least a 60% likelihood at this point. That doesn't mean you can't have one in December, but things are starting to turn, right? Some of the longer term indicators are starting to turn. Some of the time-based indicators are starting to turn. So it would be an uphill battle. You can have divergences where you see something happening, right? You see the weakness in the market, but it doesn't mean you can't have like a divergence where you somehow put in a higher high, even though every other indicator is putting in lower highs, right? Like that's happened. We know that can happen. That's happened many, many times before. So the bearish case, whether you want to say the top is October, which again, decent odds, or December, right? The bear case is to say, look, what's happening right now is setting up a topping process, and the market would likely go lower in the first half of 2026. That doesn't mean that it can't go up at all in 2026. It just means, generally speaking, that in the midterm years, you'll witness lower highs for a while. So the time-based perspective is the most compelling case for the 2026 bear market, right? And again, that doesn't mean the bear market starts in 2026. Normally, the bear market starts in the fourth quarter of the post-halving year, and then it continues for approximately 1 year. So for instance, in 2021, the top was in November. The bottom was a year later in November of 2022. In 2017, the top was in December. The bottom was about a year later in December of 2018. So we know that bear markets last approximately 1 year. In 2013, it actually lasted a little longer than 1 year because the top was in like late November, early December, and then the low occurred early January. So it was maybe about like 13 months or so. But all in all, you would expect a normal bear market to last approximately 1 year. Now, here is where it gets tricky and why it feels like the cycle, it leaves something to be desired. Because every prior peak was accompanied by something that we don't have right now, and that is euphoria. There has been no real euphoria in the crypto markets. In fact, one of the things that I've said before for the S&P 500 is one of the topping processes you look for is when the price hasn't really moved for a year. Now, we're sitting here we're talking about that for the S&P 500, but then you can't start to notice that for Bitcoin, the price is where it was 1 year ago. And so the reason why the price kind of sitting at the same price for a long time while it kind of can lead towards tops is because the bulls just get exhausted, right? Like the dip buyers get exhausted, and the same thing kind of happened last cycle, where after so much time of buying and price not going higher, eventually they give up And if the buyers get exhausted, that can lead into the midterm year bear market. But what are we missing again? We're missing euphoria. And no prior 4-year cycle top has occurred on apathy. Now, you might say, well, Ben, Bitcoin has never topped on apathy, but it actually has. It is topped on apathy one time. And it's the example we have given the entire market cycle to say, look, guys, we are not in the 2020 style rally. We're not in the 2017 style rally. We're not in the 2013 style rally. We're in a rally that's comparable to what happened in 2019. And the reason for that is based not around the halving, not around any of that stuff, but it's based more so around monetary policy. What time in Bitcoin's history is the most like this time when viewed through the lens of monetary policy? It's 2019. There's something on the website, the End of the Cryptoverse website, called the social risk. Think about it as social interest. And when there's no interest, it's color-coded dark blue. When there's a lot of interest, it's color-coded dark red. So if you hide it all and you only look at anything above 0.8 and anything below 0.2, what do you see? You see that this entire cycle has been simultaneously going on during a period of apathy and relative disinterest. No one really cares that Bitcoin is trading at $94,000. Right now, to say that Bitcoin is trading at 94K sounds like a bearish thing. But when you think about the fact that Bitcoin was trading at 15K exactly 3 years ago, this is a great return, right? I mean, Bitcoin is up from the low, even at this point, 500%. Any investor in the stock market, that would be incredible, right? Even if you were to take profits now, if you bought at the lows, that is still a 500% return. That is a 6x move off the low. For comparison, the S&P 500 from the low is up 92%. Not even a 2x off the bottom. The NASDAQ, which has done remarkably well from the low, is still only up 138%. So Bitcoin gets a bad rap in bear markets for going down 70%, 80%, but people will conveniently ignore that it significantly outperformed stocks to the upside for years. And so what if it gets deeper corrections in bear markets? If it goes up 800% in a bull market, it should be allowed to drop significantly in a bear market without labeling it something that's never going to recover, or labeling it whatever you want to label it to make yourself feel better for missing out on it for the last 16 years. So if you look at Bitcoin and you're sitting there like, oh yeah, see, I was right. Just know that bear markets for Bitcoin are normal, right? Like they've happened every 4 years, all through Bitcoin's prior existence. And so if we have a bear market in 2026, and we're potentially kind of framing it now, like, in the topping process, it's normal, right? Like that's normal. It doesn't mean that Bitcoin is going to zero. It's just a reset period. Now, the hard part, again, is that how can we say this is the same as 2021 and 2017 when we're so apathetic? It's because it's more like the 2019 rally and subsequent disinterest. It's more like that than any other prior 4-year cycle top. But what it leads people to say is that because there's no euphoria, this time is different, right? And therefore, the argument is that it'll go on into 2026. Guys, no one knows what's going to happen. We are a product of our experiences. It's basically like, several years ago in early 2022, when I said that, Bitcoin dominance was about to enter a massive uptrend. Why did I say that, right? It was because I knew from prior experiences what happens to altcoins during periods of tighter and tighter monetary policy. And I knew from experience what happens to altcoins when Bitcoin dominance is very low. They then start to bleed to Bitcoin. So because I experienced that, I was able to say confidently, guys, look, this is what's going to happen again. If you didn't live through the 2018 bear market and live through the 2019 bull market where alts bled to Bitcoin, you might have assumed that Bitcoin dominance going into this macro uptrend was not really a strong possibility. But it happened anyways, right? It happened anyways. So the reason why I think that 2026 is more likely to be a bear market than not is because I'm a product of my own experiences. And every single midterm year has been down. 2014, 2018, and 2022. And the top always formed in the fourth quarter of the year before the midterm year. That's why. So how do we compromise? How do we reconcile the difference between the 4-year cycle tops that we've seen that have happened under Euphoria and then potentially this top? And even if you get a higher high in December, which I don't know. I mean, I don't know if that's the most likely outcome, but anything's possible. How do you reconcile it? Well, first you say, what if this top in 2025, either October or December, but not looking great at the moment. If we can get back above the 50-week moving average within the next week or so, then we'll see. Okay? How do you reconcile it? Well, what if this down period in the market by Bitcoin in 2019, what if you say, what if that ends up being the 2026 bear market, right? Where you get a downturn in the market, right? Like you get a downturn in the market, and the 4-year cycle ends up being right again, but for just a different reason. Because a lot of people are looking at this and saying, well, hold on a second, Ben. You're forgetting one thing. QE is coming, right? That Jerome Powell said they're going to stop quantitative tightening in December. And that's only a couple of weeks away. So who are you to sit here and say that it has to go down for the next 2 months? Like, who are you to say that? Well, if you actually look at what happened last time the Fed ended quantitative tightening, what you'll notice is that QT came to an end in August, and then you can see that it bottomed here in September. And when that happened last cycle, Bitcoin actually topped a few months before QT ended. A few months before. And then after QE began, Bitcoin continued to go down for a little while. So what I'm suggesting as a possibility is, in the same way that QT is going to end in December, is it possible that Bitcoin has a top a couple of months before QT ends, just like it did in 2019? It then bleeds into it. After QT ends, it drops even further. And then that drop just ends up being the 2026 bear market. One way that it could work is you could say, well, hold on a second, Ben. If you exclude the pandemic, which is exactly what we're going to do, I don't need, I don't need to see in the comments about, well, you're talking about the pandemic. No, I'm not talking about the pandemic. Well, if you want to comment on it, you can. It'll help the video. But I'm not talking about that, right? I am simply talking about the 50% drop that Bitcoin had before we went into the whole pandemic stuff. That's all I'm talking about. I'm talking about a clean 50% drop from the high. And when you see that 50% drop from the high, you'll notice that it took place from June until December. So about 6 months, about a 6-month drop. Now, in this case, you have a 6-month drop, and it might make you think, well, what if this one ends up being 6 months? Is it possible that if the top is October, then you go November, December, January, February, March, April, is it possible that this one only ends up being 6 months? And if it is, could you have a low around May? Yeah, it's possible. It absolutely is possible. In fact, I would still lean towards, if the top is October, I would probably lean more towards a low next October. But if we are setting up for a bear market in 2026, I will start to look for signs of a low as early as May, even though that doesn't really seem like the most likely outcome. And the reason is because if you don't top on Euphoria, is it possible that the bear market isn't quite as bad? Now, for a long time, I have said to expect about a 70% drop in the bear market. And the reason I said that is because if you look at prior bear markets, you can see that they've been getting a little bit easier to navigate, right? First, it was a 94% drop. Then it was an 87% drop. Then it was an 84% drop. And then it was a 77% drop. So extrapolating, which any good engineer will tell you should not do, but we're going to do it anyways. Extrapolating would suggest the next bear market could be about a 70% drawdown from the high. Now, a 70% drawdown from the high would put Bitcoin basically right around 40K. And honestly, I mean, maybe that should be my base case, but the reason why I'm not so sure about that is because these prior bear markets occurred on Euphoria. And when they started from low Bitcoin dominance levels, right? I mean, you guys knew I was going to work it in. Low Bitcoin dominance levels. So look at the 2018 bear market. When did it start? It started from a low Bitcoin dominance level, right? Dominance was at 35%. In 2021, January 2022, dominance was at 39%. Now, it could be that by January, maybe dominance will be all the way back down to 40% or something. Maybe. But what if it's not, right? Like, what if it's not? What if it's still hanging out up here? Because one of the ways that you get dominance to drop is by witnessing higher highs in the social interest, right? In social risk. But if you go look at the social risk, no one's here. I mean, yeah, so there's dozens of us, but no one's really here. If the orange line, the social interest, like look at where we are now compared to 2021 and 2017. One of the reasons why bear markets are so brutal is because all the retail investors that flock into the space at the top, they end up providing the sell pressure for the next year. So for a lot of long-term holders that maybe never sell their Bitcoin, it doesn't make sense to them like why the price would go down 80%. But the price is not going down 80% because the long-term investors are selling. They might sell at the peak, but they're not usually the ones selling throughout the whole bear market. The people that sell through the whole bear market are the short-term investors, the tourists that come in and buy the rallies at parabolic tops. That is who is typically responsible for how brutal the bear markets are. That's why it drops 80%. It's because of the tourists that come in. They buy the top, they sell the bottom, and they don't learn their lesson. A few people stick around, they learn their lesson. So, can you have an 80% drop? Is it possible? I mean, anything's possible, right? Like, obviously, there's all sorts of events that you cannot predict. Anything is possible. But the main reason in the past for 80% drops is when retail is flocking in at parabolic tops and they provide selling pressure for the next year. What you'll notice about the 2019 drop is that it was really slow. And it was because we topped on apathy rather than topping on euphoria, right? So instead of topping on euphoria, we topped on apathy instead. And therefore, it left people wondering, like, well, can there be something else, right? Like, is that truly it? Or is it possible for there to be something else? And so what ended up happening back then is QT ended. The Fed, they were cutting interest rates. But you could argue that even though they were cutting, rates still were not anywhere close to maybe what they needed to be to really get Bitcoin back in business. And you could argue the same thing is going on right now. Like, yes, rates are dropping, but right now, we don't even know if the Fed's going to cut in December. In fact, right now, it's more or less a coin flip as to whether they cut in December or not. Guess what? In 2019, they did cut in December. And when they cut, it ended up marking a low, right? Ended up marking a low. And back then, you can see Bitcoin also sort of sold off into mid-November. And then it basically stayed flat for the rest of the year. And then we had a rally. And then ultimately, we had the pandemic drop, right? We had the pandemic drop. What I'm thinking about right now, though, is the fact that the Fed funds rate is still above the 2-year yield. And one of the interesting things about that, so if you look at the Fed funds rate, it's currently at 4%, but the 2-year yield is at, I believe, it's at 3.6%, right? So it's about 40 basis points below the 2-year yield. You could argue that if you want to treat the 2-year yield as sort of as a theoretical neutral rate, which is this abstract idea, where if the Fed funds rate is above the neutral rate, the economy slows down. If the Fed funds rate is below the neutral rate, the economy speeds up. You could argue that if the Fed were to cut aggressively, it would reignite the animal spirits. So how do we reconcile all this stuff, right? Because we've gone through the 4-year cycle stuff. And really, if you look at the ROI from the low for the last 2 cycles, and you can see where Bitcoin has so far topped this cycle, it basically topped when it always does, when you measure the ROI from the bottom. If you measure the ROI from the halving, you can also see that when Bitcoin found this high in October is around when it normally does. Like, it wouldn't be that surprising if we look back on this and we're like, okay, yeah, that was the top. That's normally when the top is. The only thing that would have provided some hope is if you measure it peak to peak, and then you look at this cycle compared to 2017. But the problem is back then, Bitcoin was also topping within about 3 days when measuring it peak to peak. Okay? So a lot of ways you measure it from a time-based perspective is what makes people bearish. They lived through the 2022 bear market. They lived through the 2018 bear market. And some even lived through the 2014 bear market. And they don't want to go into 2026 saying that this time is different, even though there's not euphoria. They don't want to fall into the trap of, oh, it's different because there's not euphoria. Because last cycle, it's different because we have institutions coming in. Now, obviously, this cycle, we had way more institutions than we probably could have ever imagined, and we had ETFs. But last cycle, it was all about, oh, what company is going to be buying Bitcoin next? And that's what kept people hoping. This cycle is something different. Every cycle, we are thrown a curveball. Every cycle, we're thrown a curveball. So that's the time-based stuff. And if you look at Bitcoin, and you just look at the 50-week moving average, this is one of those things where when you look at it, what you'll notice is that every single time it's gone below the 50-week. Every single time the price has gone below the 50-week moving average, this late into a cycle, it is historically meant it was over, right? You can see those examples right there. And so it's hard to look at that chart and immediately say that, oh, this time has to be different. Normally what happens after we drop below the 50-week moving average is we have our date with Destiny and Bitcoin goes to the 200-week moving average in the midterm year. You can see after it drops below the 50-week, we then go to the 200-week in after 2014. Same thing in 2018. Same thing in 2022. We actually went below the 200-week estimate back then. Why can't it happen in 2026? Is it just because we topped on apathy? In 2020, in 2019, we topped on apathy and we still went to the 200-week moving average. So from the time-based perspective, it's not hard to understand like why people are starting to flip bearish, because we've seen this before. Now, the reason why it's hard, in 2019, we also got a weekly close right here below the 50-week, and then it just kept holding. Like it would drop below it, and then it would rally back above it the next week, and then it would drop below it, and then it would rally back above it the next week. And then it kept holding at the 50-week, and then we ended up getting one more rally. Who knows what that rally would have turned into if the pandemic didn't happen. So that's why I'm trying to be somewhat flexible on this. Like I think there's probably a 60% chance the top was in October. There's still a chance, you know, who knows what could happen. There's still a chance you could have one in December, but it's starting to look a little bit less likely, even though it could still happen. We'd need to see Bitcoin back above the 50-week moving average. And if you get that, then who knows, right? I mean, yeah, maybe. The other thing is that near the end of cycles, when you have a death cross, when the 50-day SMA crosses below the 200-day moving average, you can see that every single time that has happened this cycle, it's formed a low within a couple of days. A low within a couple of days, every single time. And so we just had a death cross, but we haven't yet formed a low yet, potentially. I mean, maybe we have, we just don't know it yet. But if the cycle is not over, Bitcoin needs to rally like yesterday. Because what happens when you get a death cross and you don't get a rally is exactly what happened in 2022 when you had a death cross. Because back then we had a death cross, we had a small rally, but if we don't go anywhere, people give up and they sell. And then what happens is you get a drop and then you get a bigger rally to the 200-day moving average. That's what also happens at the end of every cycle. You can see you get that rally to the 200-day moving average. It ends up being a macro lower high. It even happened in 2019, right? It happened in 2022 as well. It also happened way back over here in 2014. So that 200-day moving average, if the top is in, is likely going to come into play within the next few months, where it will likely form a macro lower high if the top is in. Now, if Bitcoin can rally this week back above 100K or 103K, it leaves a little bit of flexibility. But if we get another weekly close below the 50-week moving average, the odds start to mount that the top is in, and whether the top indicators went off or not, it's irrelevant. There's going to be too many people that are going to think that 2026 is not going to be a good year, and they're going to start to fade. And then maybe once we get much looser monetary policy, people will come back to the table, just like they did after the 2019 downturn. So from a time-based perspective, it's very clear. The other thing I wanted to bring up is, very briefly, MicroStrategy. All right, I want to talk briefly about MicroStrategy, because MicroStrategy arguably is, it's doing the same thing that it did last cycle, basically. But Bitcoin is behaving in a slightly different way. So look at what happened with MicroStrategy last cycle. It found a top in February and then a lower high in November. And then after that, it went below the support level. Is that not exactly what just happened, right? Basically, you have a top here in November and then a lower high and then now it's gone below. So if this were to play out the same way, there's going to likely be, at the very least, a bear market rally for MicroStrategy at some point. Would be my guess, right? Because a lot of times when you get these breakdowns, everyone then panic sells, and then you get this, like, you know, potential bear market rally back up. Okay? Now, my guess is that rally by MicroStrategy, if the top is in for Bitcoin, would correspond to Bitcoin rallying back to the 200-day moving average. Notice in 2022, Bitcoin rallied to the 200-day moving average in April, and MicroStrategy had this bear market rally top in April. But that is where Bitcoin rallied to its 200-day moving average in April. So it would form a macro lower high. And notice that Bitcoin did not go below this intermediate low before the bear market rally to the 200-day moving average, right? So MicroStrategy did, but Bitcoin did not. Bitcoin did eventually go below it, but it was much further on into the bear market. Now, one of the reasons why being open-minded to a low as early as May, if the top is in, or even if there is a higher high in December, is because in 2022, MicroStrategy actually found a low in May. It then swept the low about half a year later in December, but if you bought MicroStrategy back then in May, you essentially bought the bottom. And then it rallied from 13 all the way up to $500 a share, over $500 a share. So I want you to look, though, at one slight difference, which is why I'm not being, like, as deterministic as I maybe otherwise would be. If you look at this, it would be pretty clear in a lot of different ways from a time-based perspective that we are due for a downturn going into 2026. Like, we're due for that. And that it's just a normal part of the cycle. Bear markets should not be scary. Trade the market that you have, not the market that you want. Bear markets allow you to get in positions that then you can ride for several years. Okay, they're not a bad thing. Again, what I've said before, right? The money is really made in the bear market, right? If you have the courage to buy in the bear market. But in this case with MicroStrategy, you know, back then in 2022, it formed a lower high for Bitcoin USD. But what's interesting is that if you look at the lower high by MicroStrategy in 2021, it was in November. When did Bitcoin top? November. But then if you look at this cycle, the lower high was in July. But Bitcoin didn't top in July, right? It had a top in July, but then it went higher in August and October as well. So, you know, is it possible that if you have like a rally by MicroStrategy back up, you know, is it possible that Bitcoin could exceed the 200-day moving average? Yeah, it's possible. In fact, in 2019, Bitcoin did exceed the 200-day moving average. It did. So it's not impossible for something like that to occur. So I still think, as I've said for a while, the top is either, from a time-based perspective, October, because that's when the ROI from the low would suggest it would be. Is there still time for Euphoria? I don't want to say it can't happen, but we're running out of time. Right? We're running out of time. Doesn't mean it can't happen. It's just, who knows? There's only theoretically about 6 weeks left. Now, I mean, you know, I do look at this and I wonder, like, I mean, is it possible that we just kind of go down into December, we get an into QT, then Bitcoin maybe gets a little bit of a bounce into early 2026, and then we still have a bear market? Absolutely. That's how it could play out. But I do wonder about these divergences, because when you look at when Bitcoin got a higher high on the USD valuation, it was on this little rally by MicroStrategy right here. So if MicroStrategy were to get a bigger rally, now maybe there would be another nice knee-jerk bounce by Bitcoin back up to the upside. Hopefully, before it would go below, you know, these lows over here, which that would be kind of repeating what it did in the last cycle, right? Getting a nice multi-month bounce back up to at least the 200-day moving average within the next 2 to 3 months would be kind of probably the baseline expectation. Because a lot of people were asking me, well, MicroStrategy just dropped straight down and took out this low. Could Bitcoin do the same? Well, last cycle, MicroStrategy did the same thing, right? Like it just dropped, took out the low, and Bitcoin dropped, but it didn't take out that low. It still had to rally back up, and then eventually it took out the low. The peak indicators that a lot of people are curious about include things like, you know, like the pi cycle top. But I don't think the pi cycle top's would have ever signaled. Because if you look at if you take the moving averages and you divide them and you extrapolate this trend line, it's not going to go above 1 this cycle regardless. And so you could argue that if it was not going to go above 1, there was never going to trigger anyways. But it would have suggested it would have gone higher than where it is right now. So what if where this pi cycle top is more similar to, again, the 2019 top, where they came close, but not really that close. And then there was a downturn, but not as deep as the other bear markets. There was a downturn, but then the money printers came back on. And then we had Euphoria. It's possible. So again, there's a chance here that the 2019 downturn that started before QT ended could just be the 2026 bear market that started in Q4 of 2025. And what if you get maybe a 50% drop instead of 70? Because a 50% drop from the high would actually put you between 60 and 70K. And the reason why that's interesting is because that's exactly where the 200-week moving average is going to be in 2026. And you can see that in the midterm years, Bitcoin tends to return to the 200-week moving average, sometimes even in other non-midterm years. It tends to at least go to the 200-week moving average. So perhaps we have our date with destiny after all, but maybe the bear market is more tame. And you know what's interesting is if it plays out like that, if it plays out like this, where you have your bull market, and then you have sort of like a smaller bear market, and then another bull market, I feel like both sides could kind of claim they're right? Like, you know, the bears could be like, well, yeah, like we said there was going to be a bear market in 2026. Like, why didn't you listen? Like, we always have a bear market. But the bulls could say, well, I mean, a 50% correction, is that really a Bitcoin bear market? I mean, obviously a 50% drop in stocks would be horrible. But in Bitcoin, I mean, a 50% drop is a Tuesday afternoon. So, you know, maybe there's a way. I don't know if we can do this on TradingView. ISM. Can we look at the ISM on here? Maybe we can't. I can't remember. I feel like it is possible. But I can't fully remember. Let's see. Okay. I think I got it here. So we're going to go with this. Here we go. Okay, so here's the ISM. If I can... Okay. This is a really interesting chart because the ISM, the Purchasing Managers Index, shows you that these prior peaks by Bitcoin correspond to peaks in the ISM. You see that? Now you know why retail's not here, guys. Look at the ISM. The ISM looks more like the bear markets than it does the bull market. No wonder retail's not here. It's because Main Street is struggling. Wall Street has been doing fine. The S&P is doing fine. Main Street, they're the ones stuck in traffic on Struggle Street right now. So it has been trending up. And so some people are saying, well, maybe if it goes up in 2026, Bitcoin could go up. Well, what if it's down here and maybe the next time it goes up isn't until, say, like 2027 or 2028? So again, you could have I'm not like, I don't look at this chart and it's not like I don't sympathize with the people that have these views. Like, yeah, like the reason why retail's here is because this looks more like a bear market than a bull market in terms of the ISM. That's why retail never came back. It's one reason. But that doesn't mean they're going to come back in the first half of 2026 either. And one of the reasons is because Jerome Powell is going to likely be replaced as the chair of the Federal Reserve in May of 2026. And I don't think he wants to leave his post aggressively cutting interest rates and being blamed for inflation coming back. I think he's going to be very difficult to convince to bring rates down a lot. I do. I really do. Let me see if I can get this to load here so we can look at it. The markets are currently saying that Powell will cut one more time before he leaves. Because, again, he would be replaced in May. He'd still be there. He just wouldn't be the chair. They're saying he'll cut one more time. Powell will likely be replaced by someone a lot more dovish. And when rates come down a lot more, and when the money printers likely come back on, because that's the only way they know how to fix our problems, unfortunately, then things could change. Maybe things would change at that point. But the problem is that in the first 5 months of 2026, there's going to be those macro headwinds, right? There's going to be those macro headwinds. I'm not saying the ISM can't go up. I'm just saying that by the time it goes up, like, do we really think it's going to go from, 48 back up to the 60s or the 70s within the next, 6 months? A lot of times it takes a long time. Back over here, it found a low in 2012, and the high for Bitcoin wasn't until a year later. In the next cycle, the low was in January 2016, but the high for Bitcoin wasn't until almost 2 years later. In 2020, you had a low in May, and then Bitcoin topped about a year and a half later. So even if the ISM were to start aggressively going up, it doesn't mean that then Bitcoin has to immediately go up in early 2026. It could be you get that sort of shorter term drop just to allow the market to reset, and then we continue higher, maybe before a 70 to 80% drawdown. So the argument is, if you don't top on Euphoria, do you have to have an 80% drop in the bear market? Maybe not. Maybe you get more of like a 2019 style 50% drop, which would still be in line with everything, right? It would still be in line, because that would also put you between the two, at those prior all-time highs. That's where it would put you. It's got to be a possibility, right? So I can look at something like the Pi cycle top and be like, yeah, like, what if we just get that brief downturn in the first part of 2026, and then things start to pick up after that? You could also go look at something called the terminal price, another indicator. Now, what's interesting about this indicator is that it also hasn't gone up to the red line. But guess what? It didn't in 2019 either. It just kind of stalled out. It went down, and then it barely got below the green line during the pandemic. And that was, imagine that. That was a crazy drop. It did go lower if you look at Wix, but where is the green line today? Where is it? It's currently at 56K. It's probably going to be above 60K by mid-2026. So you can kind of see the same thing playing out, just on a grander scale. But the 4-year cycle could still remain intact, right? Like, you could have a scenario where you have a drawdown, but it's not as bad as the bears think, and it's worse than the bulls think. So then everyone ends up claiming they're right. Either everyone's right or everyone's wrong. I don't know how you look at it, but that's what makes it a market. The bulls have a point, right? There's no euphoria. How do you have an 80% bear market when Bitcoin dominance is sitting at 60%? Normally the bear markets, the aggressive bear markets, start at low Bitcoin dominance levels. But we did have a bear market, the 2019 bear market, that started in June of 2019, and Bitcoin dominance was at the same level that it's at right now. So it's not impossible to have a bear market from higher Bitcoin dominance levels. It just means it might not be as bad. because you don't have euphoria. You don't have retail coming in and panic selling every low. The people that are here today have been here for probably years. So that's where I am on this stuff right now. The bulls have a case. The bears have a case. Over a long period of time, the bears sound smart, but the bulls make money. That's the reality. I mean, right, it is. And I'm not saying it won't ever change. I mean, at some point, we'll probably have a more prolonged downturn, because all markets eventually do. But there's been 1,000 times through Bitcoin's history where you could argue that the bears had a good point, but the price still kept going up. And even though the price went down for periods of time, you know, think about all the crazy Bitcoin skeptics that said they were right every single time we had a bear market. Do you think any of them ended up buying in at the lows, or did they just become skeptics again and claim they were right at the next peak? You have to think about it, right? Like, think about it from that perspective. It's easy to just constantly say that, you know, to make all these accusations about what Bitcoin is just because it starts to drop. But if they did it after every prior top, what credibility does that argument have? Because they'll just do it again in 4 years and claim they're right again. So just be careful. Try not to fall into those traps, because I mean, it's easy to, right? It absolutely is easy to fall into those traps. But that's generally my view. In the short term, I know a lot of people are like, well, you know, what about this cycle? Like, you know, is it possible that Bitcoin could go back up? It's tough. Like, we're running out of time. The time-based aspect of it is a major headwind right now, right? It's a major headwind. The lack of euphoria could be a potential reason for a tailwind if there's any type of, you know, any type of catalyst that could start things moving and get people to at least believe, oh, we're going to head into a euphoria phase. But it could just be another divergence. The other thing that we talked about is the relative strength index, because the relative strength index, you know, is something that you would really want to see hold at these prior lows, but you can see it's broken through. And in 2017, when it broke through in January, you know, the cycle ended up being over, right? When it breaks through, it's usually not a good thing. Not saying you can't have fake outs, but generally speaking, you have to at least be open-minded to, you know, to getting a rally back up at some point, but it just being a lower high. So the RSI doesn't really look that great. The monthly RSI obviously left something to be desired this cycle, because you can see that there's no euphoria, right? This monthly RSI just looks kind of like what happened right there in 2019, where it went up, but it didn't really go up as much as you would think. It came back down, it reset, but not at the lows. It reset at a higher low, maybe like right here, and then it went into euphoria. So there's certainly a chance that all that could happen. One way this could play out on a more grander scale is the Powell cuts rates again. We end up getting a 2026 sort of bear market that maybe lasts for at least 6 months. The new chair comes in, they cut rates, they turn the printers on. You then get the next cycle, and things start to rally again. But then they realize they're starting to reignite the animal spirits. Inflation starts to come back, and then they have to raise rates. That might sound crazy. That's exactly what happened in 2000 in the .com era. That's exactly what happened in the .com era, right? So if you look at the S&P 500 and you look at interest rates, you can see that they were lowering rates some through here, but then eventually they had to raise rates again. And that's what ultimately killed off the animal spirits. And then we had the .com crash. If you look at that whole move through the lens of M2, the money supply, I would argue that to some degree, it's still playing out almost perfectly. If you take I think it will diverge, to be clear, but if you take a bar pattern from 1996 until the actual top, Even that 20% drawdown we got back in April, March lines up. So you could argue that we're kind of getting close to this drawdown right here into early 2026. But it still doesn't mean it's over necessarily. Right? It doesn't. And the other thing too is you could argue that it'll, it could very well diverge. Right? It could very well diverge. There's obviously a lot more companies now that are actually using AI, and it's improving efficiency, and it's actually allowing them to generate a profit. Whereas back in the .com era in the early days, a lot of the companies weren't really generating a whole lot of profit, and things were more crazy back then than they are today. Right? They were. But it is something to, to at least keep in mind, keep in the back of your mind. So those are my views. I hope it's useful to you. I think both sides have a case to be made. Both sides have a case to be made. I think one way you can reconcile it is to say, like, what if we're like kind of in this phase where the market is just kind of begrudgingly dropping a little, but it's not exactly like what you've seen in the prior bear markets after major euphoria phases. So I want you guys to keep that in mind. We'll keep talking about the markets and trying to figure out what's actually going on. But those are my views. Those are the case for the bulls and the bears. That's at least one way we could potentially reconcile it. In the short term, if Bitcoin can get back above the 50-week moving average, then we'll look at the potential upside. But until that happens, I think we at least have to sort of be aware that normally when you get these closes below the 50-week, it's at least worthwhile to start thinking about, like, what could that look like going into the midterm year. And my guess is this, in a very unambiguous, like, I'm not trying to not say what I mean. Regardless of what happens for the rest of this year, I do think that Bitcoin will have its date with destiny at the 200-week moving average in 2026. And my guess is that date with destiny will be somewhere between 60 and 70K. And it should happen. It'll probably happen sometime in 2026. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.